Hello and welcome to the weekly edition of Your Trades with me, Snehisha, and with me is Priyanka Uppal. Let's take you through Friday's moves as well as what the markets did over the course of the week. And on Friday also, rather stable moves coming in from the Nifty and broader markets as well. So they have panned out well in Friday's intraday trading session. But when we take a look at the weekly basis, Nifty was up 0.5% this week. Well, that's surprising because of all the volatility that we did see coming. But Thursday and Friday turned out to be two very positive sessions for Nifty. So Tata Steel and Maruti were the big winners over there. Mid caps up 1.3% this week. Small cap index has snapped its 6-week losing streak, and Praj Industries and Global Health have been the topmost gainers in the small cap index. For the week, then Nifty Realty was the biggest sectoral gainer, snapped its 3-week losing streak, and Sobha and Swan Energy were the biggest gainers over there. And it's also registered a biggest single week gain in over 2 months, and Nifty Realty for the week was up 5%. So that's your top performing sector. On the other hand, Nifty IT has hit a 2-month low this week. Top sectoral lows over the course of the week down 6%, and all constituents of Nifty IT have declined, but Coforge and Infosys have declined the most. On the other hand, you have Nifty Metal up 4% this week, Auto up 4% as well. PSU Banks up over 1.5% this week as well. So really good moves coming in from the market. Not much to worry about when it comes to the course of this week as well. Now, another pain point for the week for the market this week was the entire FMCG index, right? Because that index is also at its 2-week low as of now, and valuations have also reached dangerously close to that 1-year low mark. So some stress being seen on the FMCG index as well. And for the course of the week, that was down 0.8% when you take a look at the FMCG index. And Tata Consumers and HUL were the biggest losers when it comes to this index. So, this is a snapshot of what the markets did over the course of the week. But Priyanka, take us through the other big news over the course of the week, and what was market moving and what was the street watching out for?
So, Sahi, you've largely covered what happened in Indian markets, but then let's do consider that what happened on the macro front also. A lot of action which happened this whole week from the global markets. One, of course, there was a supportive macro cues. If you talk about US markets, FOMC meet outcome, Fed maintained a stance of 3 rate cuts, which rallied US markets 2 continuous days of intraday highs we've seen yesterday. Last evening's trade of US markets, and in fact, S&P hit a fresh record high. Japan, of course, there was a surprise. There was a move where the central government, central banks did cut interest rate from negative to, they changed nearly in 17 years. But Japan market also, Nikkei, we saw heading towards 41,000 in the trade. Central Bank of Swiss did a surprise rate cut. BOE held rates steady. So a lot of action coming in from the global markets also. Commodities, gold surged. Gold hit a fresh record high. So a lot of triggers which came in from US markets, a lot of triggers which came from Asian markets. The macro were very supportive cues. But then what lies ahead for us from here? Because now, since we have seen a recovery of about 4 to 6% in mid-cap and small cap, market breadth looks positive. But then do this relief rally has more legs? Let's understand this. To help us navigate the direction for market for coming week now, we have Rajesh Palvia joining in to give us more on technical front. Rajesh, good afternoon. Welcome to ET Now. What do you make of the markets from here? Because what we saw that from derivatives data, 21,900 clearly a good support on Nifty. Market breadth was bullish. Can we expect a relief rally further also, or consolidation can also not be ruled out here?
Good afternoon, Priyanka. So in this week, we have seen that both the indices have given a breakdown of their important support area. Nifty briefly went below to 50-day moving average, and Bank Nifty moved below to 100-day moving average. But after a strong recovery in last couple of trading session, again both the indices are now managed to close above 50-day moving average. So that's a positive sign on the near-term structure. Till this 50-day moving average is defined by both the indices, I think trend is likely to remain on the bullish side for near term. If we look at the call put concentration, still 22,000 is still having call concentration area, but on the other hand, put writers are also aggressive at 21,900, 22,000 strike. So if at all Nifty able to hold 22,000 level for next one or two trading session, then there would be another round of short covering we can see in the Nifty, and possible upside target we can see towards 22,250 to 22,300 in the continuation of this pullback. So at this moment, stance is on the bullish side. Buy on dip should be your strategy. 21,900 should be one can keep as a stop loss. For Bank Nifty, the stop loss one can keep at around 46,500. That's the major put-based concentration at this moment. So I think that level needs to keep as a stop loss to hold long position in Bank Nifty. Some more recovery we can expect in coming week towards the expiry of March series, and possible target for Bank Nifty we can see towards 47,200 on the higher side.
All right, Rajesh, thanks for sharing your views on that. This is Nehi also joining in. Help us understand the moves that we've been seeing in the IT index, right? Because Nifty IT has hit a 2-month low this week. It's a top sectoral loser for the week, 6% down. And help us understand. Now, I understand that this is largely because of Accenture's, guidance being trimmed. They've trimmed their outlook going ahead, and that has had an impact on Indian IT as well. But tell us if this is a temporary blip coming in for IT, or is there, can we expect some more downfall coming in for this sector? Also help us understand, if one has to navigate this sector, what would the strategy be here? Because surprisingly, Coforge and Infosys have been the biggest losers this week. Coforge is mid-cap IT, Infosys large-cap IT. So, well, what would be your strategy when it comes to trading this index? Help us understand.
Yeah, definitely some downtick is there in Nifty IT, and if we look at the near-term structure, this is the third, fourth day where we are seeing supply pressure in Nifty IT. Now Nifty IT is trading near to its 100-day moving average, which is placed at around 35,100 kind of zone. If at all Nifty IT slips below to 35,000 level, 35,100 level, then yes, we may see further more pressure towards 34,700, even 34,600 kind of zone on the downside. But if we look at the constituent of Nifty IT, I think some of the stocks like TCS, that is holding the ground on the longer term time frame, though there was some supply pressure in near term basis, but still if we analyze on the longer term setup, still the stock is holding the support on a longer term time frame, and I think that support is placed at around 38.50. So till TCS is holding these level, I think there is a high possibility that TCS may again show some buying interest in decline, and we may see again pullback action. Even another stock that is looking bullish on IT pack, that is HCL Tech. Again, in this correction, stock is still holding its breakout level on the longer term time frame. Stock is bullish. Though there was some corrective move, but we believe that till stock is holding about 1510, 1500 kind of zone, I think again there would be buying interest may come around those level, and some pullback action we can see in HCL Tech also. So I think next couple of days are very important for Nifty IT. One needs to close it, watch it very closely, whether we able to hold 100-day moving average support area at 31,100 or not. If hold, then one can try to buy some of the stocks, as we mentioned. TCS and HCL Tech are our preferred choice at this moment.
So you would go for a wait and watch approach. You'll watch the levels and then make a decision for buying in IT. But what about the sectors which have shown a stellar move this week, Rajesh? Auto sector clearly. Stocks which are economy facing like capital goods, industrials, which recovered very well, and that to be from broader markets. Beaten down names like real estate pack. How are these sectors going to perform? What would be your picks if it lies from these spaces only?
The Nifty Auto clearly is in bullish trend. Most of the stocks are still holding the ground, and long-term structure for most of the stocks, be it Maruti, Bajaj Auto, Mahindra and Mahindra, TVS Motor, all these stocks are almost trading near to their all-time high trajectory. Even if we look, if we take the view from Nifty Auto Index, it's also almost trading near to its all-time high trajectory. So overall structure for automobile index is in the bullish trajectory only. Nifty Auto is comfortably holding about a 50-day moving average in this decline also. So that clearly giving us sign that whenever market will show any kind of pullback action, there would be always performance from the auto stocks. So our preferred choice at this moment from automobile is Maruti is our preferred choice. Maruti, we can see another round of rally and a possible target on the high side we can see towards 12,600 to 12,800 in the continuation of this uptrend. One can buy with stop loss of 12,100. The second stock that we like from two-wheeler space, that is Bajaj Auto. Almost stock is trading near to its all-time high trajectory, and we expect that this momentum can continue further. 9,300 is the near-term target for the stock. One can look to buy this stock with stop loss of 8750. And the third stock that we like is Mahindra and Mahindra. Though there was some corrective move in last couple of weeks, but as we look at the longer term time frame, stock is holding the ground on the long term chart. So we expect that Mahindra and Mahindra can also start recovering from the current level. So M&M can also be a buy with stop loss of 1830. Upside target we can see towards 1950 to 2000 kind of level.
Rajesh, thanks so much for your views coming in on the auto sector. But Rajesh and viewers, both stay tuned with us as we carry the discussion ahead on the week that was and the week that's about to come into the next segment. We'll slip into a short break. You stay tuned.
Welcome back. You're watching Your Trades. Rajesh is with us. Rajesh, tell us more on the moves that you anticipate on PSU space, because we did see some recovery coming in majorly from the energy basket. And of course, some PSU banks also recovered. What do you make from here? How would you trade in this space?
Yeah, surely we have seen very strong pullback in Nifty PSE index, and Nifty PSE almost recovered around 2.5% to 3% in this pullback. Looking at overall structure, most of the PSU stocks, PSE stocks were under oversold trajectory, and most of the stocks have shown very good short covering action in this pullback. So we believe that PSU basket can continue furthermore upside as the significant corrective move is already done, and most of the PSU stocks have taken the support from their important support area of 50-day or 100-day moving average, and that is clearly showing that that near-term trend is intact for all this stock, and we can see further more upside momentum from PSU banking space. We like Canara Bank. Very strong pullback action in last couple of trading session, and the kind of buying interest which we are seeing that clearly shows that if stocks now holds above 555 level, then possible upside target we can see towards 590 to 600. From PSE basket, we like Bharat BHEL. Then we like other stocks like NTPC. That stocks are also looking promising, and I think most of the stocks are now ready to show further more recovery. So one can look to buy these stocks with approx 2% of stop loss to buy at the current market price. And I think we believe that till Nifty is now holding about 22,000 level, some more recovery we are going to witness in whole PSU basket going forward. So one can add these stocks in their portfolio. To play this up move of PSE basket, one can look to buy at CPSE ETF also. That is also looking very promising. 50-day moving average is also protected by CPSE ETF. So I think we are projecting target for CPSE ETF around 85. Keep your stop loss at 76 to buy CPSE ETF.
Thanks for sharing that with us. But with that, also help our viewers with the picks that have made it to your radar, the stocks that you're picking out for next week's action. What are you bullish on?
So we are now moving towards the March series expiry, and towards the expiry, a lot of stocks are now trading near to all-time high trajectory in this kind of market also. Pidilite is our first choice to buy. Almost stock is trading at all-time high trajectory. Multiple supply zone breakout is already visible on the weekly as well as on the daily chart. A long built up throughout the series. So we expect Pidilite can extend its up move towards expiry. 3015 is the target where we are expecting. One can buy with stop loss of 2920. The second stock that we like is JSW Energy. Now stock has shown recovery since last couple of trading session, and now stock is approaching towards its multiple supply zone. Almost stock is trading near to its all-time high trajectory. We believe that with the kind of structure we have on the longer term time frame, JSW Energy is having potential to cross its all-time high trajectory. We are projecting target towards 545, so one can buy this stock with stop loss of 506. And the third stock that we like is Indus Tower. Stock has shown very smart recovery in last half an hour of trade. And looking at the breakout on the weekly chart, we believe that this momentum can exceed further to 95 is the near-term target where we are projecting. Keep your stop loss at around 266.
Did saw a 10% move today. The big open interest also happens to be here. Thanks very much, Rajesh, for the views and the stock recommendations on the show today. All right, let's move forward. And we did speak to Gautam Duggar of Motilal Oswal, and he has a strong opinion coming in. He says that incorrect to call all broader market frothy. And let's hear what he has to exactly say.
I do agree that valuations are expensive for mid and small caps, but it's not correct to say that the entire mid and small cap basket is frothy. Allow me to explain that. Mid cap index right now is trading at around 30% premium to Nifty. Nifty is trading at close to 19.5 times 1 year forward now. And mid cap index is trading at somewhere about 27 times, which obviously is very expensive. Small caps are also trading at expensive valuation at an index level. Usually the average of small cap, if you look at the comparison versus Nifty on a 10-year basis, the long period discount is about 24%. Against that 24% discount, today it is trading at a 10% premium to large cap. So clearly, when you compare at an index level, and we use NSE Mid Cap 100 and NSE Small Cap 100 when we do comparison of these baskets. So on that basis, definitely things are expensive.
All right, that's the word coming in from Gautam Duggar, but let's keep it with the theme of the broader markets and rather positivity on the broader markets, because we also have Anand Shah, the head PMS and AIF investments at ICICI Prudential AMC, who's drawing comparison in the broader markets and the large caps. Now, he says he prefers the mid pack of stocks primarily because he is bullish on the manufacturing and manufacturing-like businesses. So listen into what's fueling this positivity when it comes to the small and mid caps.
So I think within mid-cap, small-cap also, we actually remain slightly overweight in our flexi-cap portfolios, purely because we are more overweight manufacturing and manufacturing-allied businesses in general. And when I go and check for these businesses, there are very few in large caps and mostly they sit in the mid and small caps. So by virtue of our positive outlook on this side of the business or the economy, makes us bottom-up basis a lot more overweight versus the index on a mid and small.
All right. Well, that's all in this weekly edition of Your Trades. Coming week is a truncated week. We have 3 working days only and, of course, a monthly expiry as well. From me and Snehi, thanks so much for watching the show. Stay tuned to more updates.
If you like this video, then like, share and subscribe to ET Now.